Hi children, welcome to the online session of Sri Gokulam Public School, Guruvayur. Children, we are here with a new chapter today, chapter 10, Special Purpose Book, part 1. In this chapter, we will discuss about the cash book. So, in our previous class, we have discussed about journal, ledger and trial balance. Today's class is a special class. Why? Because we are going to discuss about the special purpose books, which is also known as special journals or subsidiary books. So what is these books? Let us discuss. Business transactions are numerous and it becomes difficult to record all the transactions in one book of primary entry. So as you know, business transaction, every day there are a lot of transactions which is taking place, and each day or whenever this transaction take place, we record the entry in the books of primary entry. Which is the book of primary entry? Yes, it's journal. So we make all the entries in the journal. So it is difficult to record all this transaction in one particular book, isn't it? So it would be convenient to maintain a separate book for each type of transaction. What do you mean by each type of transaction? So one to record cash transaction, another one to record credit purchase, and yet another to record credit sales. So for each category of this transaction, we can maintain a separate book. So it becomes easy for us to record the transactions. Now book of this type is called a book of original entry or primary entry. It is a special form of journal. So we can call this book as a special type of journal or form of journal. It is also known as a subdivision of it. Journal entry is not passed for the transaction recorded in such books. So if we are maintaining special purpose book or special journal, which is it is actually known by. So when you maintain this type of books, we don't record the journal entry. So after preparing special purpose book, we can straight away move to the posting in the ledger account. Okay. So this is what our special purpose book is about. Now, classification of subsidiary books or subdivision of journal. So we divide this journal book into 6 categories. The first one is cash book. That is what we are going to discuss today. To record, this book is used to record receipts and payment of cash. Receipt means what? Receipt means when we get the cash in our business, and payment means when we pay the cash. Okay, cash is moving out of the business, including receipt into and payment from bank. So cash book we maintain both that is receipt and payment of cash as well as receipt and payment of check. Okay. Now next category of subsidiary book is the purchase book. In purchase book we record only the credit purchases. Okay. And in sales book is the third category or classification of subsidiary book. In this we record only the credit sales of goods. 2 more books are there. Which are they? Purchase return book. In purchase return book, we record the return of goods previously purchased on credit. So those purchases, we can say the credit purchases, when they are returned, they are recorded in purchase return book. And to record the return of credit sales made by the customer, we record it in the sales return book. So for all these particular cases, we maintain a separate book. Okay. One more book is there, or better we call it as journal proper, to record the transaction which cannot be recorded in any of the above books. So as I mentioned, cash book is used to record only the cash and check dealings. Purchase book and sales book for credits, purchase and sales. Purchase return and sale return for the return of goods purchased or sold if it is a credit purchase or sales. So for each of these cases we maintain a separate book, and those transactions which is not recorded in these 5 cases will be recorded in journal proper. So this is the speciality of subsidiary books. Now let us, as I told you, today we will discuss about the cash book. Let us see the features of cash book. As I told you before, in cash book only cash and bank transactions are recorded in the cash book. Cash receipt and check deposited are recorded on the debit side, while cash and check payments are recorded on the credit side. So you know the rule of debit and credit, isn't it? Whenever there is increase in cash, because cash is an asset, so whenever there is increase in the cash, you will record it in the debit side of cash book. And whenever there is decrease in cash, that is payment of cash, then you record it in the credit side. So following that rule of debit and credit, you have to make a record of transaction in the cash book. Now it records only one aspect of transaction. See, in cash book we record only the cash dealings. Credit dealings are not accepted. Okay. Next point is cash and bank transactions are recorded in the cash book in the chronological order. So in the order of happening of an event, we record the transaction in this book, date wise. Next is it performs the function of both journal and the ledger at the same time. So as I told you, when you are preparing such types of books, we don't have to go for a direct journal entry. So cash book and posting into the ledger, so it's like same the function, it is performing the function of both journal and ledger at the same time. Next point is related to kinds or types of cash book. Children, there are two types of cash book. One is simple cash book, which is also known as single column cash book, and there is two column or double column cash book. Okay, in this double column cash book we maintain cash book with cash and bank column. Okay, now here is the format of a simple cash book. Just see, it's like ledger itself. Date, particular, voucher number if it is given, then we can mention ledger folio, amount. Again, date, particular, voucher number, ledger folio, amount. This is your debit side and this is your credit side. See, let us do one problem now. Prepare single column cash book for the month of April 2020 from the following transaction of Amitabh of Chennai. See here in this particular question, they have given you the question, some transaction is given to you, and you can see this is the solution part of this. Okay, so in solution, the first thing what you have to do is in the books of Amitabh Chennai, then write the title. What are you preparing? You are preparing a cash book following a single column. Okay, so cash book you can write, debit side is there, credit side is there. Prepare a box. In this box you can write date, particular, ledger folio. See, voucher number, it's not compulsory. If you want you can draw, otherwise you just avoid it. Ledger folio, amount, date, particulars, ledger folio and amount. So debit side and credit side. Now how to start? Let us move to the question. 2020 is the year, April 1. Cash in hand rupees 25,000. So this business is already established, and last, that is on 31st March 2020, when you close this book, there was a closing cash balance of 25,000 with us. So that we are brought down. We are bringing it to the next month, that is April 1. So our transaction start on April 1. So in our cash book, we are bringing the amount which was there in our last, or we can say 31st March 2020, when we closed this our cash book, we had a balance of 25,000 with us, that we are using for the next month, that is April 1. So as 2020 you have to write April 1 to balance brought down. It's very important, just understand the way of doing this. April 1 to balance brought down. How much is the amount? 25,000 is the amount which was there in the last month. Okay, so now you are bringing it down in the month of April 1st. Now next is, so this is the entry which you made, cash in hand, that cash is there with you, it's 25,000. Now next transaction is April 2. What is the transaction? Cash sales. So you sold some goods. See, what is the journal entry in this case? April 2, cash sales. The transaction, the journal entry goes this way. Cash account debited 2,20,000 given in the question, to sales account 2,20,000. So for cash sales, this is the journal entry. Okay, cash account debited 2,20,000 to sales account. So which account you are preparing? You are preparing the cash account. So this cash is on the debit side. So on the debit side of this is the cash book. This is the debit side. So on the debit side of the transaction, you can write April 2. This is your second journal entry. So April 2 to sales account. Okay. How much is the amount? 2,20,000. Now moving to the next transaction. What is the next transaction given in your question? April 3. Deposited cash in bank 2 lakh. So you have deposited some amount in your bank. So you can see here, cash account is debited. Okay, Your cash balance is increased. So your bank balance have increased. Bank is an asset. Asset increases, debit it. But your cash balance from the firm have decreased. So cash will be credited. Okay, but you are having only cash account. You are preparing single column cash book. So cash is credited here, isn't it? Cash is credited here. So move to the actual working part. This is your cash book. If you remember the journal entry, bank account debited to cash account. Cash was credited. So on the credit side of your transaction, in the date you write down April 3, by bank account. How much is the amount? 2 lakh. Okay. Now let's move to the next transaction. Next transaction is on April 4. Wages paid in cash. So children, as you know, wages is an expenses. Expenses increases, you have to debit it. So wages account debited 22,500 to cash account 22,500. So instead of see, if you are thorough with your journal entry, you can directly post to the cash account. You don't have to I just showed this journal entry so that it become easy for you to understand the things. So without showing this journal entry, you can directly prepare the cash book and recall the journal entry in your mind, and wherever the cash is written. So see, in this transaction, cash is on the credit side. So on the credit side of your cash book, you can directly show by wages account 22,500. Same is the case with each of this transaction. Okay, so just go through these entries. See, April 4 again, cash sales. So cash account debited to sales account. Your cash is on the debit side. So on the debit side of cash book, you can write to sales account 1,80,000. Okay, so if you want clarification, you can see here April 4 to sales account 1,80,000. Next transaction. Next transaction is on April 7, deposited cash in bank. Again, bank account debited to cash account. So on the credit side of cash book, you can write by bank account 1,50,000. Next, so same way, April 9, paid cash to transporter against the bill number, this on goods sold. So you are paying cash, so cash goes out, isn't it? Here you have to see that it is goods sold, but the transaction is telling us that paid cash to transporter. So you have paid the transport expenses. So here you have to use the word carriage outwards. Okay, so whenever there is some expenses related to transport, then that wordings which you have to use is carriage outward. Okay, so here you have paid the transporter some cash for the the goods which you are going to sell. So your carriage outward account debited to cash account. But here you have to understand that cash is on the credit side. So on the credit side of cash book, what you will write? By carriage outward 4,500. See, it's very easy. Okay, once you know the journal entry, then the posting is very easy. Next is April 20, paid cash for repairs. You know that repair means it's an expenses. So expenses are debited. If expenses increases, debited. So expenses account debited. You are paying cash for that transaction to cash account. Okay. Now, to cash account 2,000. Cash account debit side, credit side of cash book, you will write by repairs account 2,000. Next transaction. Here you can see April 28th. April 7. Okay. April 28th, it's over. Now April 21. Purchase goods on credit from UNC. UNC is a company from where we have purchased some goods on credit. Tell me children, whether this transaction we will record or not. No, this transaction will not be recorded. Why? Because this is a credit transaction. And in cash book, we record only the cash transaction is recorded, not the credit transaction. Hence, this transaction will not be recorded. So, we will not show it in the cash book. We will not show it in the cash book. Okay. Now, next transaction is 28th. Paid cash to Sunil, a creditor, after deducting discount rupees 500. So, we have paid some amount to our creditor. Sunil is our creditor. We paid him some cash. So, after deducting the amount, of discount, and that comes to be 9,500 is given in the question. So Sunil account will be debited 9,500, and from the business cash is going out. So to cash account, cash is decreased because we paid amount to Sunil. So cash account debit side, you will record what you will write, April 28 by Sunil account 9,500. Next transaction is April 28, paid electricity bill in cash. So electricity bill means expenses. Expenses are debited to cash account. So on the cash account credit side, you will write by electricity expenses. Now again, cash collected from Mahesh, rupees 4,500 after allowing discount of rupees 2,500. The last transaction is April 30th. Cash collected from Mahesh, rupees 45,000 after allowing discount of rupees 2,500. So from our debtor, we received some cash, that is 45,000. Discount was allowed 2,500. So after discount, we received him from Mahesh 45,000. So cash is coming in the business. So cash increases. So cash account will be debited with 45,000 to Mahesh account. Our debtor is decreasing. Debtor is an asset. When asset decreases, we will debit it, okay, sorry, credit it. So with that logic, we have posted this entry. So children, cash account is debited here. So cash account debit side, you will write to Mahesh account. See, you can write here cash account debit side April 30th to Mahesh account 45,000. We miss one journal entry, that was on April 3. See, issued check to a creditor rupees 49,900 after deducting cash discount of 3,100. Here you can see that we are giving our creditor a check. So creditor's account debited to bank account is the journal entry, but we are not preparing a bank account, we are preparing a cash account. So this entry also will not be shown, this entry will not be shown in the cash book, because we are issuing the check and not the cash. Okay children, so almost all the entries over. So this is how you are supposed to prepare the cash book. It's a very simple problem, just use some logic and prepare. Now the most important part is closing the books of account. Now what you have to do is make a total of debit side and make the total of credit side. And see, after making total of debit side and credit side, you can notice that your credit side is short. Okay, so when you make total of this side, you will get 4,70,000, and when you make this side total, you will get shortage of 72,500. So after writing that shortage 72,500, write down here April 30th. Why April 30th? That is the last day of the April. You are closing your books of account. So by balance carried down, you have to write 72,500, you have to write, and on the next day, that is May 1 is the next month, okay, of first day of next month. So to balance brought down, what is the amount? 72,500. So this is the way how you have to show your cash book. 2 column or double column cash book. So in single column cash book, we saw that only one column was there, that was for cash. But in double column cash book, we will have 2 column for cash and 1 for bank. Let us see the format for cash book. This is the format for double column cash book. This side is known as represented by debit side. You can write here debit. And this side is credit side. Okay. So we can you can see here date, particular, ledger folio, cash and bank. So here these 2 column, one is for cash and the other one is for bank. So this side, the debit side, is known as the receipt side. So all those transactions because of which your cash increases, that will be shown in the receipt side. Example of receipt side, or some of the transaction because of your cash increases or receipt of cash is there, they are sale of goods or sale of fixed asset. So when you sell a fixed asset or goods, you receive cash. So your cash increases. So you will show it in the debit side. Now this side, the right hand side, is the credit side. So date, particular, ledger folio, cash and bank. So you can see here cash and banks, 2 separate column is here in the credit side also. This side is known as the payment side. So all those events or transaction or because of which your cash decreases, that will be shown in the credit side or payment side. Example is the purchase of fixed asset. When you purchase a fixed asset, you have to spend money or cash, because of which your cash balance will decrease. So you can pay the cash or through check also, that can be issued. So those transactions in which banks or checks are dealt, that will be shown under the bank column, and where the cash is being transacted, that will be shown under the cash columns. So this is your receipt side and this is your payment side. Now let us do a problem. Here is one problem. Record the following transaction in double column cash book and balance the book on 31st March 2020. So 2020 March transactions is given in front of you. So the month of March, whatever transaction related to cash is there, it's given to you in this question. So the first item is March 1st, cash in hand and cash at bank. So cash in hand is 12,750 and cash at bank is 72,400. So at the month of February, you have some balance in your cash as well as in the bank that you have to bring to the next month, that is March 1st. So this is your cash book. This is your debit side. We can write here as plus, that is your receipt side, and this is your payment side. That means those transactions because of which your cash decreases will be shown on the credit side. What was your first transaction? Cash in hand as well as cash at bank. So here you have to write March 1, because cash in hand means cash increases, isn't it? Last year's balance you are bringing down. So here you should write to balance brought down. Okay. What is the amount? 12,750, that you will write over here. And in bank, cash at bank, what is the amount? 72,400. That also you will write under bank column. So your journal entry or the cash book would be, you can see here, March 1st, to balance brought down 12,750 and 72,400. Okay. Now the next transaction. March 4th, received from Asha cash rupees 1,200 and a check rupees 3,200, allowed discount rupees 400. So in this transaction you are receiving the cash. So cash receipt is there. So cash is also there and some amount you are received in check also. So here also in both the column cash as well as in bank column you will record this amount. But children, there is one more item, that is the discount of 400. So this discount you don't have any column in cash book, but you have to show this discount. So you will prepare a journal proper to record this discount. So here you can see I have prepared a journal entry 2020 March 4th, discount allowed account debited 400 to Asha account 400. B, the discount allowed to Asha against payment received. Okay, you are allowing the discount to Asha. So that will be shown on the debit side, because discount is a loss for you. 400 less you are allowing to discount to the Asha. Okay, she is our customer. So here the journal proper is over. But what about the journal and recording of this transaction in cash book? So here you have to, that date is March 4th. Here you will write to Asha. Okay, to Asha. And the amount you have to write both in cash as well as in bank. Okay, in cash you will record 1,200 and in bank you will record 3,200 as per your question. You can see to Asha account 1,200 and 3,200 I have recorded. Now the next entry is, the next question is March 7th, paid salary to staff by check. So payment, pay means what? It's a payment for you. So you paid salary and that is paid through a check. 25,600 is the amount. So let us show it in this entry. So it's March 7th where the transaction is taking place. So I have already written the date. Here you will write by, sorry. So I had to write here by salary. and the amount, because it is through check that I have given salary to my staff, then that I have to write under bank account. Okay, so see, you can see here, by salary I have written it in the bank account. Now next transaction is March 9th, withdraw cash from bank for office use. So here I am withdrawing cash from the bank for office use. So in the office, cash is coming in, cash is increasing, isn't it? So whenever there is increase in cash, means what? Receipt is there. Okay, so receipt. What will be the journal entry in this case? March 9, the journal entry will be cash account will be debited to bank. So see here, cash is debited. Okay, if it is difficult for you to understand, so cash is debited over here. So on the cash account, this is cash book, cash account debit side, I have to write to bank. Okay, to bank, I will write here to bank. But children, remember, when I write here to bank, the amount I will write on the cash side. Okay, to bank, cash side. Such entry, see children, cash as well as bank column are there in this cash book. So we have both cash as well as bank column in these. Okay, so see, cash I have recorded, in cash side I recorded to bank. Now the same entry, that is on March 9th, I have to record for bank by cash account. See, for cash as well as bank we have columns here. So I recorded debit aspect as well as credit aspect in this one particular account itself. Do you know what these transactions are known as? When both the entry is made using one particular account, then or book, it is known as contra entry. Contra entry. Such entries are known as contra entry, because with one particular account, cash book, you are recording both cash as well as bank. Here that contra entry you had to represent by writing C in the ledger folio. In ledger folio, you have to write C to show that it is a contra entry. Okay, when you write by cash, the amount will be written in the bank column. So see the difference, to bank, but the amount in cash I have to write, and when you write by cash, the amount you will write under bank. Don't forget to write C for this contra entry. Next entry is on March 12th. Interest paid by bank on bank balance. See children, we have a bank balance in our bank account, and on that bank balance we received a interest. So bank paid by bank, interest paid by bank on bank balance. So on our bank balance, bank have paid us interest. That means we have received the interest. Okay, so after reading the question only you make out that transaction. So on March 12th we have received the interest. So here you have to write to interest. Okay, and because it is through bank that we have received this interest, you have to write the amount in the bank column. Okay, so this is how you have to make the entry for bank. Now next transaction is March 16th, purchase furniture ₹20. Purchase means what? When you purchase something, you have cash, you have to spend the cash. So there is payment of cash. So on March 16, what I will write here? Buy furniture. Okay, buy furniture, and because it is the cash which I have spent to purchase this furniture, the amount will be written in the cash column. See, buy furniture, amount I will write in the cash column as 16,500. Okay, now next transaction is on March 21st. Paid to Mohan and company by check, discount receive 100. So you have paid Mohan a check. and you have received discount 100. So as I told you, whenever there is an entry for discount received or discount allowed, you have to show it under discount journal proper, that is journal entry. Okay, so let us see. Mohan account debited 100 to discount received account 100. So you have received the discount, that is the you can say it's a profit for you or any income for you. So that income will be credited. Okay, so Mohan account is debited to discount received account with 100 rupees. So this journal proper is used to show the discount allowed or discount received. Or the item for which we don't prepare cash book, which is not shown in cash book, will be shown under separate account, that is journal proper. Now regarding that transaction, that particular transaction, we have paid to Mohan. Okay, we paid, that means payment is there. So in payment we know that on which date, on 21st March 21st, you will write by Mohan, and because we have paid Mohan through a check, you will write the amount in the bank column as 10,900. Okay, so that was March 21st. Now next transaction is on March 24th. Proprietor withdrew from office cash for his personal use. So here also cash withdrawal is there for personal use. Personal use means what? Drawing. So drawing account debited to cash account. So yeah, withdrawal, or we can say payment. So cash is moving out. So which side you will show? March 24th by drawing, because payment cash is going out. So on cash side you will write 11,600. Okay, March 24th. Next transaction is on March 29th. Sold goods to Manoj for cash. So you sold goods and you receive cash. So which side? It's a receipt. Okay, so in receipt side means this is your receipt side, debit side. So March 29 to sales. How much cash was received? 14,800. So I record it over the cash column. Next entry is last March 31st, deposited office cash in bank. So you have from your office, the cash is going to the bank. So what is the entry here? Bank will be debited. Okay, bank will be debited to cash account. So here March 31st you can write to cash. This is also a contra entry. As I told you, in contra entry, that particular entry, what was the question? Deposited office cash in bank. So cash is going to the bank. So journal entry was bank account is debited to cash account. Okay, so here you can see bank is debited. So debit side of this is also bank. Okay, bank column is there. So on the debit side of bank account, cash book, you will write 31st March to cash account. See, to cash. So to cash account, because both cash and bank entry is there. So you will write contra C. Represent it as C. Contra entry. Then in bank column you are supposed to write 21,200. Now the same March 31st entry you will show in the credit side as well. What you will write? March 31st by bank account. See, by bank. So in cash, this debit aspect have been recorded. To record the credit aspect, what will you do? You will write March 31st by bank account, and in cash column you will write 21,200. Okay, so both debit aspect and credit aspect have been recorded. Now very important part is the closing of this cash book. When you close the books, you can see that cash column will, cash debit side will be more than your credit side. It should be more because this is your receipt side. So your receipt side will be more than your payment side. So when you make total of debit side, you will get 50,650. But your credit side will not be showing 50,650. It will be short by 1,350. So this short amount you can represent by balance carried down. Okay, write down by balance 31st March, by balance carried down, and the amount 1,350 can be written over here. Next is bank balance. When you make total of bank side, you will get 98,000 on the debit side. But your credit side will be short by 39,600. So first you make total of debit side, then you subtract it from the credit side. You will get difference of 39,600 that you will write on the credit side and make a total equal in both the side with 98,000. Okay, so this is how you will close this account. Now on April 1, to balance brought down, you have to bring this carry down to next day or next month first day. On April 1, to balance brought down, 1350 will be written over here, and the bank, that is 39,600, will be written over here. So I hope you understood the way of posting the entry in the cash book when we maintain a double column cash book. Okay, now children, now we can move to the conclusion of today's topic. Today we have discussed about double double column cash book, in which cash and bank account columns are maintained. We saw what is contra entry. Contra entry means withdrawal of cash from bank for office use or cash deposited in the bank. So whenever you find the transaction when both cash and bank is dealing, you have to pass a contra entry. Okay, and this contra entry represented by writing C in the ledger folio. So you have to practice this problem so that you get a better understanding of the way to do this problem.